All right, guys, we are here today with Todd Dexheimer out of Minneapolis. And dude, I'm super excited to have you on the show. I know I was on your podcast like it was quite a while ago now, maybe like over a year ago, but
it's been a while.
It's been quite a bit, but you are absolutely crushing it in what you do. So to give everyone a little bit of understanding, give us a breakdown of exactly what your business is and what your current assets look like.
Yeah. So so business is called Endurus Capital. Right now, I mean, we've, I don't know, owned about 500 million in assets. So mostly multifamily. We're talking like 100 to 300 unit buildings. And then we have some assisted living. Also, we have about 400 units of assisted living. We've got a retail strip center. We got an industrial building. But again, mostly multifamily is where our bread and butter really lies. Value add, and we syndicate those deals.
Yeah, it's funny. Before we were talking on the show, you mentioned your assisted living stuff, and you said that it's not really something you're focused on. But you said you own 400 of them.
Yeah, 400 units, right?
I mean, so I'm not that interested in this. I only own 400 units of this.
Well, not that I'm not interested in it. It's just not like where we're putting all our effort into. And quite frankly, we're putting plenty of effort into it because we have 400 units, but it's not like that's our daily focus. We're not underwriting a ton of assisted living deals. We do look at a few deals if they look really interesting and we feel like there's a good opportunity there, but that's not like our big focus.
Yeah, that's awesome though, man. Like you have a lot going on. And I mean, it's not very often we get people that have assets like portfolios of your size. Like very regularly people come in, they have $50 million, $60 million, right? You added a zero onto that with everything that you have going on. And so how long have you been in the industry for?
Boy, it's been 16 years now? I think it's 16 years that I've been in the industry. So it's been a while now.
I mean, it's funny thing is it's been a while compared to like a lot of people, but over the course of life, like that's not an insane amount of time to accumulate what you have. And so like, how did you even start going after that, right? Like when you started 16 years ago, was your goal to acquire $500 million in assets, or did that just sort of come around as you just were getting after the grind?
Well, so that's it's always evolved, right? So my goal when I first started was just to buy something. That was the goal. And then as it evolved, I remember sitting in a we had a local real estate RIA, and the guy brought in a ton of speakers from all around the country, and all these people spoke about different things, flipping houses, wholesaling, all kinds of stuff. And the one guy that really resonated with me was David Lindahl. Your listeners might know that name. He's a multifamily guy. He wrote 3 multifamily books, at least I think 3, maybe more. And after I got done listening to him, I'm like, I'm going to own 1,000 units. That's my goal.
Wow.
And I now own 1,000 units and far surpassed that. But that was my big goal. And that was like, a year, maybe 6 months after I started.
I mean, that's ambitious, dude. Like to be making that decision so early. Cause I feel like, especially nowadays, most people, like when I started, my goal was to, I think, own like 10 properties in 5 years. Right. Mm-hmm. And you said 100x that, right? That's awesome. And so leading into that, you start with multifamily right away, or did you play the residential game first?
Yeah, residential game, because I didn't know how to go and buy I didn't have money. I was a teacher. I was a high school industrial tech teacher teaching woods and metals and architecture and stuff like that. So like I'm making 28 to I think my last year I was done teaching, I was making $32,000 a year.
Nice.
Right. And so I didn't know how I could go buy a $5 million, $10 million building like that. That just didn't compute to me. I didn't have the connections. At least I didn't think I did. And so, so I started buying single family homes. So kind of to start, I purchased a single family home that my wife and I ended up moving into as a foreclosure. We fixed and flipped that one while we lived in it. And then we also, at pretty much the same time, we bought a single family home to fix up and then rent. And then also pretty much at the same time, we bought a single family home to actually flip. So I did all three of those. I don't remember which one was bought first, second, and third, but they're all bought within a few weeks of each other. And we used every last penny we had. We got an FHA 203K loan on our house, so that didn't take much. We used all of our liquid cash to buy that rental property, and then to buy the flip, I actually partnered with a guy, and he brought the money in. He actually brought money from somebody else in to the deal, and we flipped that house together.
Nice. And so, were you just like doing the labor on that? Dude, I was the shop teacher.
Yeah, I was like working my butt off day in and day out. Summers you get time off, but I was trying to pay the bills. I already committed to a construction company that summer, so I was working construction full time in the summer. Get done with the construction day, go work on my houses, and then school started. I'm doing the same thing. I'm just working 7 days a week and just grinding away and working every hour I could. So
yeah, I mean that's how you get started though, right? And so many people try to skip that part, but even if you have like the financial ability to do so, I like how you outlined that with your teaching position and breaking down those hours, because I feel like there's people that come in, they have a good financial position, like I don't need to do that hard work part, I can just sort of buy my way past it. The problem is they don't develop the work ethic, right? Like the rest of your life is completely different because you can reflect back on that period of time, and realistically nothing that you're going to do is going to be as like labor intensive as that ever again.
Yeah. I think it's so valuable to be willing to do everything, to put in that time and to grind. And look, work smarter, not harder is a great saying. I think it's sometimes taken too much to people's, like they just go, oh, I can't do that work because it's too hard. Somebody said to work smarter, not harder. I got to figure out how to be smarter. I agree with that, to try to do that as quickly as possible. But when you first start, you just should be grinding. And that's what you should be doing for a period of time. It doesn't mean it's 10 years. It shouldn't be 10 years. Read the book Shoe Dog by Phil Knight. He was grinding for like decades, not days, and a lot of entrepreneurs, when you look at their journeys, Elon Musk seems like he probably doesn't work as hard anymore, but I guarantee he was putting in crazy amount of hours, right? When he was trying to build everything, he wasn't just doing 4-hour work week, like that. That's just not how it is. My daughter was born in 2009 and I was grinding away then. I mean, literally would like go to work 6 a.m. I would get up to get ready to go to work all day, go do the house stuff. And then I'd get home and it's like 2:00 in the morning. My daughter wakes up, I give her a bottle, go to bed. And then I get up at 6, but you're going to have to do that for a period of time. It's not forever, at least it better not be. Otherwise you're doing something wrong. But be willing to do it. Sacrifice.
Yeah. People want to work smarter, not harder, but they don't know what harder means yet, right? Yeah. Their definition of hard isn't correct, and you kind of need to go through the list to figure that out. So that's awesome. So you said obviously don't do that for 10 years. How long did you do that for? And then after you kind of got out of that phase, did you stay in residential for long, or did you make the transition to multifamily pretty quickly?
Well, I stayed in residential for relatively long. So I was fixing and flipping houses, buying and keeping houses. And I did that for, what was it, like 7-8 years? I flipped and bought and sold, like 100 plus houses, duplexes, some triplexes, stuff like that. And so I built my rental portfolio up to about 100 units, mostly of single family to 4-unit buildings. And then I just realized I couldn't keep on going that route and scale the way I wanted to. And so that was kind of that push into the multifamily space. As far as the grind goes, and there's different levels of grind, right? The crazy hard grind was probably for honestly like a year to probably like a year to two max, and then I don't want to say I stopped grinding because I was still putting in a lot of hours. We were flipping houses. I was still going crazy. But at least a little bit less, spending some more time with my family, realizing that's pretty important. And taking a little bit of time off here and there. But I was still probably putting in, 60 to 70, maybe 80 hours a week, depending on the week, for quite some time.
Yeah. And then you decided you wanted to scale. So did you maintain your residential portfolio, or did you basically just liquidate all of that and then start going into multifamily?
Yeah, I actually believed that it was a smart move for me to keep most of that residential portfolio and kind of sell off maybe some of the bad eggs, the ones I didn't like as much. So I sold off a chunk of the properties, but it wasn't a huge chunk. I don't remember right away. Sold off maybe 4 or 5 properties, I think. And I also had a business partner at the time when we were flipping and buying those. And so, and when I went the apartment route, we split. So he got some of the properties, I got some of the properties. So that was, split some of that chunk too.
Nice.
And so, yeah, I thought it was just smart to keep them because I liked the cash flow and I didn't want to give up that income. Here's what I'm a firm believer in creating a business, grinding hard, creating a business that you have a baseline of income on your business that allows you to live. Okay. Not necessarily allows you to buy, Lamborghinis and Ferraris and go on extravagant vacations and all that kind of stuff, but it allows you to be a baseline to live. Okay. And so if we have that, then we're not forced to do bad deals. And I think this is especially important with the investor type, but I think in any business, like we don't want to be forced to have to do bad deals. And so I didn't want to I wanted to buy apartments, but I didn't want to force myself to buy apartments that were maybe too risky. And there's, quite frankly, look, there's good and bad about that. Like I also like the idea of, hey, burn the ships, man. Just, you got to jump all in. I think there's validity to that. But for me at that point in time in my life, I had 2 kids. I wanted the stable cash flow and I wanted to be able to not have to do deals because I was going to start taking investors too.
For sure. Yeah. And that base level of financial freedom, right, is such an understated thing that people tend to overlook, I feel like. But if you, like you said, if your basic lifestyle is being paid for, it reduces your general overall perception of risk. I mean, obviously there's always risk, right? If you have that cash flow that comes in and it's really barely paying for anything, and also you have to replace a roof on one of your properties, that's problematic.
Yeah.
But, if it totally allows you to just fully focus on whatever the next thing is. And so when you made that transition to multifamily, I guess, how did you start learning about that, right? Properties are analyzed different. They're purchased differently. The debt structures are different. The project management itself, once you acquire it, is different. Like, it's real estate, obviously, right? But it's not necessarily one-to-one similar to residential.
Yeah, honestly, I said, who do I need to know in order to go to the next level? And so, and I look back and it's like, I talked to a ton of people. A lot of people gave me okay or maybe iffy advice. And then some people gave me really good advice. And so it was all about sifting through some of that advice and trying to, make sense of the advice. But I didn't hire a coach. And I'm not saying you shouldn't. I actually think most people should. I think I would have been better off hiring a coach doing that. But what I did is, and I think this is also applicable, by the way, what I did. So I think you should hire a coach and do what I did, not just one. Okay. So I called a ton of mortgage brokers. I called a ton of banks. I called a ton of property management companies that were managing those type of buildings. I'm calling appraisers. I'm calling I mean, you just name it, like attorneys, CPAs, like everybody that deals with these types of buildings, I'm calling. I ended up wanting to buy properties out of state, so I'm doing a ton of research on what makes sense and why, and coming up with kind of my philosophy on what markets to invest in. I'm calling the municipalities, like I'm calling the city and talking with people, the building inspectors, talking with them about, the properties and the codes and stuff like that, and the rental housing authority. And so you just start diving in and calling people that are in the area, that are experts at that field. And you're going to get some okay advice. You're going to get some iffy advice. You're going to get some bad advice, but then you're going to get some really good advice. You just have to be able to sift through that. And, I think anybody who's got some common sense can figure out how to sift through most of that stuff.
Yeah. You'd think so, but
it starts adding up, right? It's not like I get this bad piece of advice and then everybody else gives you that same bad piece of advice.
Yeah.
You get the one bad piece of advice and then everybody else says something that just is just like, that first person or that third person, like that doesn't add up. Like, I'm just going to push that to the side there.
Yeah. I mean, again, it goes back to putting in that work though, right? Because I love how you broke through the different people that you talk to, because you're right. They will all give you their own perspectives. And after a while, you start to see patterns.
Yep.
Right. And I feel like most people's version of like research right now is they talk to like one person, or they read like one blog post and like, cool, that's what I do. And it's like that could be the most incorrect person because you have no context because it's only one. Right.
I mean, look, I talked to every single real estate agent and broker that was selling the type of properties I'm looking for in the markets I'm looking for. And they're giving me different feedback than some of the other people. So because, hey, they're selling properties, they're optimists, the bankers are pessimists. So you're getting different kind of feedback, and you got to massage those together and go, okay, what's the truth? And through my research and all that kind of stuff. So,
yeah. Do you remember the first property you bought?
Well, I'll say first property I bought after I decided to fully be done with flipping and small properties.
Yeah. That was first multifamily.
Yeah. And I had bought some multifamily prior to it, but this is like, I consider my first, right? It was a 22 unit building in Cincinnati, Ohio.
Nice. Do you remember how you found it and how you put together the deal, since it was a new thing to you?
Fun deal. So found it. It was listed on the market. I think it was just listed on the market. He had a 22 unit, and I think he had an 11 unit, and I put an offer on both of them, ended up just getting the 22 unit. But this guy, he owned the property, but he only had 9 out of the 22 units occupied. He was retiring. He wanted to get out of the game. And so I made an offer on the building, got it accepted. And then I started doing the due diligence and stuff and calling these banks, and the banks are like, look, man, like, we can't give you a loan on this, or this is what we can give you. And I was like, this sucks. Like, I can't do this deal. So I went to the guy, and I through the agent, I asked the agent, can we set up a meeting with this guy? And we set up a meeting with this guy, and I showed him an amortization table schedule. And I said, here's what I'm proposing. The banks told me, you're nuts. You're never I can't buy this property. So I'm like, I can't buy this property for this price, but here's what I'm willing to do. I need to lower the price down to $435. I think I was at like $450. And then you need to finance it for me. And here are the terms you're going to give me. And by the way, I'm going to do renovation to the property. And so we're going to set up a renovation fund. And so I'm not going to really pay you a down payment. That's just going to go into an escrow account that will set to the side. And then I'll draw on it. So it was like a bridge loan, right? Like a construction loan setup. And the guy's like, this is awesome. Yeah, I want to do it. Nice. Because my monthly payments to him were better than the cash flow that he was getting from these properties, because he only had 9 units out of 22 occupied. So he was actually making more money on this property than when he was running it himself. So
that's great.
Yeah.
When what was the ultimate exit for him there? Like, did he carry the debt for you long term, or did you have a balloon at like 5 years or something?
Yeah, there was a balloon at 5 years with some extension, pretty easy extension clauses on there. He wanted the debt. Like he didn't.
Sure.
He wanted me to keep that property for 25. I think it was a 25-year AM, and he's like, "Yeah, I'll keep it the whole time." Yeah. Like, so he was retiring. He just wanted the cash flow. Like he's like, this is a great deal for me. But it was just a conversation with this guy to figure out, why is he actually selling this building? What's his motivation? His motivation wasn't that he, just wanted cash. His motivation that he wanted to spend more time with his grandkids.
Yeah. That's such a great way to approach it though, right? Because, the guy obviously wants to sell. And the just traditional purchase at the price he wanted wasn't possible. And so by putting in that extra legwork of like saying, how can we reach something that truly is a win-win for everybody? It ends up being a win-win for everybody, right? And it gets the deal done because he wants to sell it, but no one's going to be able to buy it at his asking price unless they go and bring a fat check, which probably most people weren't going to do back then. Like that's perfect, right? And then allowed you to sort of get into your first one. And so after that one was wrapped up, how quickly did you start scaling into more properties?
Yeah, I'm basically right away. I just continued to look and to buy, and that same year, so I bought a 22 unit, I bought an 11 unit, I bought a 10 unit, I bought a 20 unit, all within.
Are these all in Cincinnati, or are you going to different markets?
Nice. No, those were all in Cincinnati. And so I bought all those. What would that add up to? Like 66 units or whatever it was. And I actually, at that point in time, I was working with a mentor because I wanted to figure out how can I scale bigger. I wanted to get to that 1,000 unit level. I wasn't there. And I was disappointed that, look, I already been in the industry for this long. Like, why am I not there? What do I need to do differently? So I hired a mindset coach and kind of a business strategy mindset coach. And I was talking to him about my portfolio, and I was talking to him about a guy who I just met who he knew. And I said, look, I want to do what he does. I want to get to where he's at, but I don't know what to do next. I need to just continue to buy these, 20, 30, 40 unit buildings, and eventually I'll get there. And he's like, why not just buy a 100 unit building right now? And I'm like, he's like, look, you've got more experience than this guy. You have more knowledge in the industry. There's no reason you can't do this. And I'm like, you're right. And so it was just that simple conversation. Like there wasn't much more to it than that. And I said, you're right. I'm going to go do it. And so I ended up putting an 84 unit under contract, another 120 unit under contract, 204 units under contract, and closed on those, probably 3 to 6 months, I think I put them under contract within like 3 months of that conversation. So probably close on about 6 months after that conversation. And then I was off to the races from there.
Nice. And so I imagine when you scaled up like that, is that when you started raising money? You started buying those larger assets?
That's when I started raising money at scale.
Right. Scale.
And prior to that, I always used private capital. So my flips, I had private capital. My rentals, I used private capital. The 22 unit, I used, some private capital. Every deal, not every deal, but most every deal, I was using private money, and so raising money, but on a small scale basis.
From like individual people, and not necessarily like compiling.
Maybe 2 people at the most.
Yeah.
Right.
So when you made that transition into starting to like really raise money, how did you start that? Right. Because I think that's one of the biggest things that always gets people, especially if they don't have a platform, is how do you even begin that whole process? There's the legal implications of it. There's the fact that you have to actually build the business case around why they should invest with you and not your competition. You have to be able to be confident enough with the deals and understand how it's going to be affecting your outcome, because you're giving up a large portion of it as well, typically with these general partner and limited partnership splits that people do. So I guess like the real estate technical side of it can all be learned, but the actual part of like having that conversation and building that network to be able to raise money, what were like kind of the biggest things that you had to overcome for that to be successful?
Yeah. So the biggest thing I had to overcome to grow and scale and actually raise a substantial amount of money was that the fact that I didn't like talking about what I did to people. So when when people would ask me what I did, I'd say, "Oh, I'm a real estate investor," and they half the time, probably 3/4 of the time, they go, "Oh, you're a realtor," and I go, "Yeah, sure." Mm-hmm. I didn't want to talk about what I did. I thought it was I would be bragging about what I did or sound arrogant or whatever. So that was a big hurdle, is to say, well, if I'm going to raise money, people have to know who I am and what I do. And what ended up actually being very convenient. So first of all, the first deal that I did, I raised from my own network that I already had. And I got that network through flipping houses and doing single families and still being quiet about things. But when you do that many deals, people start to see that you can only hide so much. And so I had those investors and I had people that trusted me. And those people, I basically said to anybody who had invested with me in the past, like, here's what I'm going to do. Like, are you in? And they all said yes. Right. And so all those investors stuck with me. So I was able to, raise on that first deal. But what ended up happening conveniently is I was actually in Cincinnati, and I was at a meetup, and we went around this round room and people were talking, and one of the guys there had a podcast. And I'm like, what's a podcast? And after I talked about what I did, because I think at that time I either had 66 units or I was just buying. And I'm like, said what I am doing. And he's like, well, do you want to be on this podcast? I'm like, I don't even know what you're talking about. Like, I don't know what a podcast is. Well, join us, blah, blah, blah. So I ended up going on this podcast. I was like, this is super awesome, powerful. I got phone calls from it after, and talked to the host and decided I'm going to start my own. And that was 2017. And I started my own podcast and got invited on Bigger Pockets and got invited on, all kinds of different podcasts at that point in time. And that was what really blew up my investor network and really my understanding of social media and the power that social media provides. Mm-hmm. And not even just social media too, but getting out in front of people and understanding, like, you're not raising money if you're just hiding behind a curtain. Like, you've got to get out in front of people. You got to talk about what you do. You got to have a presence, both in person and online.
Yeah. And it's funny. I feel like people that come from humble beginnings, kind of like you did, always have the biggest challenge with that, because you face judgment, right? Or like it's like almost embarrassing to sort of.
I still have a little bit of that.
Yeah. What's funny, like, I've known you for a little bit. I've seen you at some of the Go Abundance meetups and stuff. I had no idea you had as much going on as you do. So you definitely keep it under wraps pretty well. So that's awesome. So you went there and you scaled to, your 500 million in assets over the next couple of years. And that's obviously, you have your system down at this point. Then at some point you decided to also go into assisted living. Right. And so what was that transition, and what sort of like spurred that interest?
Yeah. So actually a guy who, I flipped a few houses, and he represented the buyer on those flips. I think, he maybe wholesaled me a house. I can't recall exactly but anyways, we've done some deals together. And so we've known each other and for a while, and he wanted to get into assisted living. And so he called me up, said, you interested? I ended up at that point in time, I just sold some properties. So I was sitting on a lot of cash, and I'm like, basically said, no, I'm not interested. And well, he sent me this information on these two properties that he wanted to buy with me. And I didn't look at them. He calls me back up like a couple days later. Hey, have you taken a look at them? No, I haven't got to. Okay, well, yeah, like call me in a couple days. Calls me in a couple days. Hey, so what do you think about this? I'm like, I haven't even looked at them. Like,
he's doing his follow-up.
Finally, I'm like, you know what?
That's
I better.
Important.
What's that?
I say he's doing his follow-up though. That's important.
He's doing his follow-up. Like he was doing his job. Right. And so finally I'm like, you know what? I can't, I don't want to keep blowing, Justin off. I'll peek at these deals. I peeked at the deals and I'm like, wow, these look actually really good. let's dig in. So we dug in more and underwrote them and ended up writing an offer on them, went to see them, looked at the industry a lot and decided let's dive in. So I ended up diving into those. And once I bought those, they made some really good money the first year. I think it was like a $280,000 investment. I think the first year made like $200,000.
Wow.
And so I bought a bunch more, and then we really, really struggled. And so then we ended up, I made $200,000 the first year or so, 250, whatever it was. And then the second year I lost like $200,000. And then the third year I lost like $500,000. And I'm like,
where's the loss coming from on this? Is it like,
so these assisted livings have low margin, high profit. Well, if you lose a resident, which is easy because they die, if something happens, the state is really into these properties. We had some bad employees, and so they wouldn't allow us for a time to admit new residents. And so all of a sudden our occupancy goes down and we're losing money. And it's just like, we can't get out of this hole. We move 2 people in and 3 move out. And so we kept on just losing money, and we have bad employees, and we'd get to some profit here and there. And so like I said, the first year or I lose like $200,000, and then, I didn't lose $500,000. So I lose $200,000 and then I lose $300,000. So $500,000 total. Yeah. And then we finally got it figured out, and we got some really good staff in there and some really good leadership in there. And, now we're completely full on these buildings, and we're doing really well on them. But and then we bought this big portfolio too. And we're still kind of, that was a distressed portfolio to start with. And so we're still kind of digging out of that. So they have light margins, and that's the trick. And that's what people got to be careful. If you're going to buy assisted living, understand, first of all, it's a very high touch industry. Yeah. So you have to have a business partner or be that person yourself that's going to be spending a lot of time in the business. And my business partner is the one that's doing it. And so you got to make sure that you're willing to put in the effort. You're running a team. Like, we have 400 beds and we have almost 300 employees.
That's crazy. That's like an organization, right? No wonder your overhead is massive, because all those
and these employees, by the way, now a lot of them are part-time.
Okay, part-time.
But these employees are not in one single office, right? They're all over. They're in every single house. So, man, it's not like you've got this, hey, we're going to have a big office meeting, and like that doesn't happen. And they work 24/7. So you can't even go into one building, Mike, and just have a conversation, go, hey, this is our plan and blah, 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 because you're missing half your staff, right?
Yeah, right.
We do it in like a shift change. And so the one shift comes in early, the other shift stays a little bit late, and you do a meeting, but you're missing the night shift.
Yeah. So that's awesome. Yeah. That's not awesome. That's super challenging. And I think it's something that when people look at these alternate investment styles, see like the rehab facilities people are doing, the assisted living stuff, see a lot of people doing even like Section 8 or some of the income driven things. There's this extra level of complexity that comes with it that's just gets ignored by all the podcasting gurus out there, guys. Like, they don't tell you these things on purpose because they want you to buy their $7,000 course, but these are complex business models that have human beings involved, and human beings are the most perfectly imperfect part of like every single business, and it makes it very challenging. So I guess in hindsight, would you do it again, or would you have just stayed in your lane with multifamily?
That's so challenging, because now we're doing well, right? If you would have asked me that question when we were losing money, I would have said, no freaking way. It's been a learning experience. Part of the reason why it's not a big focus of mine is because of the challenges of running these buildings. And I think there's a big challenge of running them at a bigger scale. So going from 400 to 600 to 1200 to 2000, I think is going to be very challenging. So I think the size we're at is a good size. Would we grow strategically slowly? Yes. But here's the thing with assisted living. It's very challenging to run it. I would suggest anybody listening to this, don't go dive into assisted living unless you've got a partner that has the knowledge already in the industry, that's an expert, that has ran these buildings, that knows what they're doing, and only then consider it and more on the passive side. So I would say it's okay to be a passive investor. You could probably make some pretty good returns with the right operator. I think we've finally become a good operator, but it took a long time and it took a lot of pain to get there. And so, yeah, I don't know. Would I do it again? I don't know. Maybe, maybe not.
It's funny. What it kind of like reminds me of, almost I talk about it, is this current trend or fascination people have with like buying small businesses. And what you're saying is so true, right? Like you need to have that operator in place who knows what they're doing, because there's all these people out there right now who are like, I've worked a job as a shop teacher and I'm going to go and buy an HVAC company that has 50 people. I'm going to buy it on seller financing and it's going to just pay my salary because I bought this company. That's not really how companies work when you have the human element involved, right? Like you need to have somebody involved in the process that actually knows how to do the business side, or you're going to have a bad time. But I would think too that the fortunate place that you were in when you decided to take this leap is you had such a established multifamily portfolio at this point that sure you lost, $500K over 2 years, and it stung, no doubt, but you were able to weather that storm. You weren't going into this first time and having to like go and pull a HELOC on your primary home to be able to survive, right?
Yeah.
That you were going to be taking massive debt on. At least I'm assuming not, but
yeah. No, 100% right. If this would have been, 10 years ago, it would have sunk me. I would have been done.
Yeah. So awesome, man. Well, I'm glad you got it figured out. And I have no doubt that's going to be another massive endeavor for you, but awesome, man. Well, we are getting to our end of show period here. So we're going to dive into our end of show questions. We ask the same 3 questions of everybody that comes on the show. So the first question that we always ask, which is always the group favorite, is what is your craziest real estate investing story? And this can be a big win, a big loss, a crazy tenant situation, a deal that went awry, whatever you have.
Can I tell like 30 of them? Cause I got a bunch of them.
Oh yeah, dude.
we could just keep going this could be a 12-hour episode. Literally.
Yeah. We can have you come back and record more. Cause I don't know if you've seen too, we've been turning the best ones into, animated cartoons on YouTube. And so if you have some good ones, you'll end up as basically a South Park character on YouTube. If you're not.
Oh man. So I don't know what is the best one? There's so many that are all like the top of my head. Do you want a poop story? Do you want a surprise story? Like, what do you want?
Let's do a surprise. I don't think we get a lot of shit stories. We get a lot of like dead people stories. So I got a good.
I do have one of those too. Yeah. Oh man. So one of my favorite ones is actually a triplex I ended up buying. This thing went for sale and it was a foreclosure. It goes on the market and I see it. I'm like, I got to go look at this place. So I go and look at it, and it's being listed as a triplex. Sorry, as a duplex. That's right. It was being listed as a duplex. And so I go over there and I walk through the building and I'm like, something's wrong. Like, I don't know what's going on here, but I walk this whole thing and I'm missing part of this building. I don't know. So I walk outside and there's another door, and I walk back inside and I can't see that door. What the heck? And you can't get into this door. And so I go back into where I'm like, I should be able to go through this wall right here to get to that door. And I see an outline of, somebody drywalled over a door. And so I'm like, I got to get in there. So hopefully I don't get in trouble, but I kicked a hole in the wall. It was a vacant foreclosure, so nobody's, who cares, right? Yeah. I kicked a hole in the wall, and sure enough, there's another unit in there. And so I walk through, and it's a bedroom, it's a bathroom, it's a kitchen. I'm like, this is amazing. And so I end up running back, writing an offer, and I get the property, but I get this. I actually didn't get the property. The guy's like, hey, we went through all the offers. You got the highest and best at $88,000. And I'm like, well, I put my offer in for like 72, and he's like, do you want it? And so I'm like, yeah, of course. Yeah. Before I signed the paperwork, I'm like, I got to scramble here and figure out, is this thing really worth it? And I go and I start doing some like, okay, I think I can actually get these college kids into this place. So I ended up buying the place. It was a category 2, which means it's condemned by the city, and you got to do a ton of work to it. So we start doing some work to this place, and we blow the walls all, but connect, like, do a whole thing to this. I mean, put a ton of money into it. I think our rehab was, well, in today's dollars, it would be like 250,000. And at that time it was much less, but, I end up advertising this to these private college kids that are kind of nearby, but I didn't know if we would be able to actually reach them. I get showings, and I'm doing showings to these college kids, and there's literally a hole in this where I kicked open, like as I'm showing these people. And I'm like I got a picture book of some of my previous rehabs. I'm showing them what it'll look like and stuff like that. And I get this whole thing, this triplex, all completely rented out for way more than I underwrote. I mean, I'm talking like thousands of dollars more than I underwrote. I got it fully rented out, and this thing's a disaster. They were moving the day they moved in. We have to get a certificate of occupancy. We're like, I've got like tons of guys over there trying to finish stuff up. I got the inspector showing up while the moving vehicles are showing up to try to get the CO on. And he's like, hey, this failed and this failed. And I'm like, look, these people are moving in right now. You have to pass this. And he's like, okay, I'll pass it, but you got to get this stuff done. Promise. And so nice. I still actually own that to this day. It's a great building.
That's awesome. Yeah. I mean, and we were able to get through the CO like that. Like, they're so nitpicky with like the dumbest things. I've heard some nightmare scenarios.
It was some like stupid stuff. It's like, dude, come on. You're passing this right now. These kids are here and they're moving, and you can see the moving truck.
Nice. So did you ever figure out the scenario with like why they thought your offer price was higher?
No, I didn't. And I didn't ask. I didn't care. It was somebody else.
Shuffle the papers.
Yeah, exactly. That's 100%. It was somebody else.
Nice. Well,
I'll take it.
I mean, you play the game every now and then, you'll get lucky.
Yeah,
but nice. That sounds like a great one. So what do you cash flow on that one now every single month?
I think it's like a $20,000 a year type of deal.
That's pretty solid for one property though. Like as a net, that's great. But awesome.
Well, when you buy it for $88,000, it works out pretty well.
Probably rents for $4,000 a month now, if not more.
Yeah, a little bit more. Yeah.
Awesome. That's great. Yeah. All right, cool. That's a good one. All right. So next question, what is the number one tip you have for a small time investor looking to take their business to the next level?
A small time investor looking to do what?
To take their business to the next level. Yeah.
Look, I mean, you got to take action. I mean, it's as simple as that. You have to take action. You have to be willing to take risks and get over your fears. And so you're going to have these fears that are going to hold you back, and that's okay. And I have fears still to this day, but you can't let them hold you back. You can't let them stop you from moving forward. And so push those fears down and take action, take the steps.
Easy enough, simple, to the point. I like it. And last question, Todd, where can people find you, follow you, and reach out to you?
Yeah. So as you mentioned earlier, I've got a podcast. It's called Pillars of Wealth Creation. You can check me out wherever you're listening to this. Listen to this first and then go check out mine. I also have my Endurus Capital. So enduruscapital.com, ENDURUS capital.com. You can reach out to me, Todd, at enduruscapital.com. And I do some coaching, not on a limited basis. So if it's something you want to buy, large apartment buildings, or even mid-sized to large apartment buildings, reach out. We can see if we're a good fit. I don't take on a ton of clients a year, but the right people that are willing to, take the steps and put in the work, I'm willing to put the time and effort in as well.
Awesome. I love it, guys. Love it, Todd. Appreciate it. So anyways, guys, go and check out his show. He's got a lot of good stuff going on over there. And also shoot him a outreach and send him an email and let him know that you enjoyed the show and that you want to know more about what he does. Remember, guys, people come on these podcasts because they want you to reach out to them. If they wanted to just live in a hole and not talk to anybody, they wouldn't bother coming on the show. So when they share their information, don't be afraid to reach out, because that is why they are here. But we appreciate you guys listening. And Todd, thanks so much for coming on, man. Lots and lots of great information, and I really appreciate your time, and congratulations on the success. And everybody else, appreciate you listening, and we'll talk to you guys next week.